If you're a small business owner and you're experiencing cash flow problems, the question I have for you is what does that really mean? Because for me, it could be a range of possibilities and it really needs to be considered a bit deeper than just what the surface level problem which is presenting itself. I was speaking to somebody today who mentioned that they're having cash flow problems, and I guess the symptom for that was that funds had run low in their bank account, and one of their direct debits was returned. The bank weren't playing ball in terms of granting them some kind of small or temporary kind of overdraft facility, and that bouncing of the direct debit caused them a few issues. So it was cash flow problems. But having spoken to that person and understood their business a little today, and knowing that they already have some kind of finance facility in place for their customer invoices, I don't believe that the problem was really being dug into enough to fully understand it. So a couple of things might be at play when you have a cash flow problem in your business. Is it to do with the fact that customers are not paying you on time? And then you've got to dig deeper behind that, and you've got to look for solutions to that particular problem. So do you need to get sort of invoice financing facility of some sort in place? Do you just need to tighten up your credit control processes? Bear in mind that your credit control processes are not just when you get an invoice out and start chasing it after that, or when you get to the end of the month and you're sending a statement out. Your credit control process really starts at the point in time that you're engaging with a customer to provide them with products or services on credit. So you've got to make your terms very, very clear and get them agreed and get them signed off and have them written all over your invoices and so on. And you've got to be having ongoing communication with your customers to make sure that the credit control is just an ongoing part of your business. So that's speeding up the money coming into your bank account. What about the money going out of your bank account? Can you change the timing of any direct debits that might actually help your cash flow? Like, is there a point in time when you expect to get more money into your bank account, and that's when you should be paying out the most money for supplier payments and so on? Can you change direct debit dates to load them into a time when you know the bank balance is going to be a bit better? Um, what about the possibility of making sure you have enough money for your VAT and for your tax? Have you got separate bank accounts set up for those things, and are you transferring money into them on a regular basis? What about the amount of money you're spending on some of your overheads? Is it worthwhile looking at those? Is it worthwhile doing a bit of cost cutting where you can that doesn't negatively affect the business? What about the amount of money you're paying yourself? Are you using the business bank account exclusively for business, or is there any personal stuff getting mixed up in there that shouldn't be? Um, and the final thing to really look at after all of that is if those things don't solve your problem, then you probably have a deeper problem around your profitability. So the question is, are you making profits? Do you know if you're making profits? Are you talking to your accountant more than once a year? Are you using the likes of Zero and some reports you can build within Zero to demonstrate how well you're doing? And if once you get that reporting functionality built and put in place as a process within your business, what do those numbers mean? And what can you do to change those numbers as well? So cash flow problem can lead to a lot of other things, but it needs to be explored in that depth over a bit of time to get to the real source of the problem and to nip it in the bud permanently.